Welcome back, dear traders. You are watching a daily wrap-up on North American trade. The traditional Santa Claus rally on Wall Street has been perking up steam. Analysts predicted that the benchmark stock indexes are on track to close the yen at record highs. The major stock indexes gained almost 6% each yesterday and closed at new one-year highs. The S&P 500 advanced on its way to the historic high printed in January 2022, and now the index is missing just 1%. The S&P grew by 27 points or 0.59% to close at 4,768. Wall Street indexes are retracing in the New York pre-market today. Futures on the stock indexes inched down by 0.1 and 0.3%, signaling a pause in the rally. And the S&P is expected to trade in the intraday corridor from 4,740 and 4,775 points. If the price goes beyond the borders, it could either drop to 4,722 or climb to 4,790. The retracement today is a logical market development. The benchmark stock indexes jumped by more than 2% following the Fed's policy decision, and the Dow Jones updates record highs. The S&P is firmly on its way to the record closing level of 2022. If the broad profile stock index closes above this mark, it will confirm the bullish market since the time when it bottomed out in October 2022. The Nasdaq has surged by more than 50% this year, so it set a new record. Its stunning rally in 2023 was driven by high-tech giants. All in all, the stock market is overwhelmed by optimism for obvious reasons. Wall Street is eager to conquer new peaks. Important events are still ahead this week. Atlanta Fed President Raphael Bostic said on Tuesday there is no urgency to begin cutting rates given the strength of the economy and the slow pace at which inflation is cooling toward the central bank's annual target of 2%. So, financial markets are pricing in a 67.5% chance that the Fed will cut rates by 25 basis points in March, according to the FedWatch tool. On the economic front, the Commerce Department report showed that in-year single-family housing starts leapt by 18% in November to a more than 18-month high. But the number of building permits has dropped sharply. The Commerce Department is due to release its final third-quarter GDP report on Thursday, followed by a report on personal consumer spending on Friday, spurring the market toward more active trading decisions. All 11 major sectors of the S&P index ended the session in the green, with energy and communication services posting the largest percentage gains. In the corporate sector, Boeing shares rose by 1.2% after German airline Lufthansa said it had ordered 40 planes for the plane maker. Amgen shares grew by 1.1% after BMO upgraded its stock to outperform. US stock index futures fell slightly on Wednesday, and the macroeconomic calendar contains potential drivers for the stock market, but traders will be able to assess the data after the opening bell. In particular, data on consumer confidence is on the investors' radars tonight. The index is expected to increase to 104 points in December, and the data on home sales for November are also on a tap. Fed officials, meanwhile, continue to try to curb stock market euphoria. And the last to speak was Chicago Fed President Austin Goolsbee, who said continued progress against inflation will be a deciding factor in any decision the central bank makes next year to cut interest rates. Amid Wall Street's optimism, the 10-year U.S. Treasury yield fell to its lowest level since July at 3.8789% on Wednesday, largely driven by a sharp rise in British markets following a surprisingly sharp decrease in the UK inflation. In the corporate world, FedEx shares plunged by 9.9% in the pre-market after the global delivery company cut its full-year revenue forecast and reported quarterly profit that fell far short of the consensus. Among Nasdaq tech stocks, Microsoft, Apple, Nvidia and Amazon dropped between 0.4 and 0.5%. Alphabet shares declined by 0.4% after reports said Google plans to reorganize most of its 30,000-person advertising sales unit. In the currency market, the trends of recent days have also reversed today. The US dollar gained ground in a European trading. Much of the attention was focused on sterling, which weakened after UK inflation is sharply to 3.9%. In this context, the dollar index was able to reach 102.40 intraday. It opened the New York session at 102.30, or 0.14% higher. As for the intraday forecast, we expect fluctuations in the range of 102.20 to 102.5. The index could further drop to 102 or rise to 102.59. The US dollar regained its footing following inflation data in Europe and the UK, and the CPIs showed that the fight against inflation is bearing fruit. While the success of the ECB and the Bank of England differs, it will be difficult for the regulators to acknowledge the completion of the tightening cycles and the intention to shift to rate cuts. The Canadian dollar is making predictable moves, and the hawkish Bank of Canada is completed by a slower than expected inflation slide, so the loonie is enjoying its strength against the soft American counterpart. The USD CAD pair traded at 1.3344 at midday, 0.10% up. And the intraday corridor is determined between 1.3290 and 1.3380. The annual inflation rate in Canada was at 3.1% in November, remaining unchanged and significantly exceeding market expectations of 2.9%. The data matched a cautious stance from the Bank of Canada and signals that the regulator is not yet considering a rate cut, but rather is asking whether enough steps have been taken to raise borrowing costs. The summary of Bank of Canada decisions may shed some light on the regulator's agenda. The document will be published after the opening bell and may give the loonie fresh impetus. The cryptocurrency market is optimistic again today. The rally is propelled by the message that the U.S. Securities and Exchange Commission will likely approve a Bitcoin ETF before January 10, 2024. This forecast is supported by frequent consultations with the applicant companies and amendments to applications. With such prospects, popular digital assets turned green again. Bitcoin opened the New York session at 43,680, or 2.8% higher. According to the forecast of analysts, if the token does not hit 43,800 today, it may well go to test new highs beyond the height of 44,000, and the alternative scenario is a decline to $43,200 and $42,800. Thank you for watching. Leave your comments and ask any questions. Good luck in your trading, and see you tomorrow.